When did it become an exchange-traded company?
2006. It was a reverse merger with a electronic marketplace called Archipelago.
What are some things about the exchange that we might not know? Maybe some interesting tidbits, some facts. What might we not know about the New York Stock Exchange just from our daily listening to news stories, watching reports on TV? What about the exchange you might tell us that we don't know today?
Well, I think it's important for your audience to know that the exchange is really a secondary market. The purpose is to provide liquidity, to provide a place where buyers and sellers can meet in a fair auction. And think about this as basically buying that wonderful piece of art that you've always wanted to own, the Picasso that's absolutely priceless. So you bid, you bid, you bid, and finally everybody drops out but you, Dean, and you're the proud owner of that Picasso. The New York Stock Exchange is a two-way auction. It's the highest bidder and the lowest seller. And so when those two can meet, there's a transaction, and then it drops back to the next highest buyer and the next highest or lowest seller, and those two constitute the market.
How are those exchanges recorded today? You mentioned earlier in the history of the exchange they were recorded manually. How are the market transactions listed so quickly for public dissemination today?
Everything is done through a computer. It's a touch screen computer that not only prints the sale on the ticker tape that you all see in brokerage offices around the country, but sends both sides of the transaction, the buy side and the sell side, to a central clearinghouse where they're paired off, and you obviously, as the ultimate customer, deliver your cash or deliver your security, and the opposite side does the other side of the equation.
You mentioned that you worked through your summer jobs growing up on the exchange, but you formally became a member of the exchange. How did that process take place? And again, did you kind of always foresee yourself working on the exchange in that capacity?
I knew at age 14, Dean, what I wanted to do. I opened my first trading account at age 14 and borrowed some treasury bills from my mother to use as collateral. Strange. Yes, strange.
Let's talk. I want to spend plenty of time on kind of the market events that took place in the late 80s and also in the early 2000s that you were directly associated with. Talk to us about the events of October 1987. And specifically, as we kind of think about all of these events, we want to tie this together to what we're experiencing today. So if there are any insights that you gleaned then that are relevant today, please let us know that too. But just walk us through the 87 crash.
Well, the 87 crash, and we never used that word, anything that rhymed with bash, cash, or dash. It was always a correction because it's so much more politically correct to say correction than it is to say crash. That we reserve for October 1929. The differences between October 19th, 1987 and today was October 19th was a one-day event. The market was down 22.6%, and we had bounces thereafter, and while it took a long while to make back up that decline in the marketplace, it was really basically a one-off event. This market is more reflective of 1973-74, although the price levels of stocks are significantly different. The 1973-74 correction basically started with the Dow a little bit under 1,000 and went down to just a little under 500, so an almost 50% decline. Well, we're not far from a 50% decline in this market today, but it started, as you all know, from a 12, 13, 14,000 Dow, depending on which day you want to pick. So from the standpoint of, in that time, I was a dealer, I was a market maker, I was what they call a specialist on the floor of the New York Stock Exchange, making markets. We had about 40 companies in 1987 that we were the market maker in. We were charged with making a fair and orderly market in those stocks. We lost 31% of our cash capital in one day. It was a very interesting day. I had hair, and it wasn't gray. And just overnight, it changed. And my wife said, "What happened to you? You've aged dramatically in one day." This has been much worse in many respects because it's like a non-stopping disease that just eats away day after day.
You mentioned the 73, 74 time period, and I'm glad you did, and also 87. What were the precipitating events that led to both of those corrections?
Well, 87 was a free-falling dollar among some issues with government, and we won't get too political here, that could have been handled better. And remember, you've come out of basically, in this market correction, a prior correction being '01 with the NASDAQ bubble. 73, 74 was also overvaluation. I mean, stocks just got to price levels that they couldn't sustain, and you had some other issues. Once again, currencies. Generally, when you look at all the major corrections, you're going to find a currency, whether it was Russia in 1998 or the South American currencies in 1997. There's always going to be a currency there somewhere that's fouling things up.
As a practitioner, what are some of the things that leads to this irrational exuberance in markets? In other words, you see stocks that are trading at historically high PE ratios, for example, and analysts begin to tell us that there's a need for a correction. What is the psychology of the market, if you will, that leads the market to trade at prices that are just simply unsustainable?
Greed.
Say more about that.
People think they're never going to go down, so we just buy anything, whether it's a house or whether it was tulip bulbs in Holland or whether it's stocks or whether it's NASDAQ companies that had no earnings and weren't ever going to have earnings, and some of them didn't even have revenues, but they were selling at multiples of the year after. Greed.
So there's this herd behavior, there's this mentality in the market. I'm glad you mentioned tulip bulbs in Holland. I teach an intro to economics course this semester, and I see some of you out there, and I mentioned tulip bulbs, and they thought I was going crazy, I think. But that's another great history.
The delusions of madness.
The great history of asset inflation.